For today's Targets in Focus, I'm joined by Richard Grace. He's the Chief Currency Strategist and Head of International Economics at the Commonwealth Bank of Australia. Hello there, Richard. Tell me, what are your forecasts looking like for the Aussie dollar in the short, mid and long term, and why?
Well, we've got Australian dollar at 104 by the end of 2011, and then we've got the Australian dollar moving a little bit higher up to 108 by the middle of 2012 and remaining at that level by the end of 2012. And the main reason for the appreciation in the Australian dollar is really associated with a lower US dollar, as US interest rates remain in negative territory, and as the Fed's given the commitment for the Fed funds rate to remain at very low levels, we think that relative US bond yields are just not simply enough to drive the US dollar stronger. The second reason why we have the Australian dollar going a little bit higher is because we don't expect global growth to collapse, and forecasts for the Australian dollar are very much contingent on our forecast for the global economy. We do see some slowing in the global economy around to about trend, which is a 3.8%, but we don't anticipate a collapse in commodity prices because Asia continues to drive global growth. We don't see Asian growth slowing much below trend of a bit over 6%, and hence we think with commodity supply slow to come on stream, demand for commodities will keep commodity prices relatively well supported. Hence, Australia's terms of trade is likely to remain quite buoyant, and without a collapse in that demand and without a significant downturn in the Asian region, both Asian currencies and the Australian dollar, because there's a tight correlation between the two, are likely to remain relatively high against the US dollar. So that sort of feeds into the second part of our high Australian dollar forecast.
What about Euro Yen then? How do you see this pair performing?
I think the yen's going to continue to remain very, very strong. So much of our Euro Yen forecasts are based on the performance of Euro. In other words, dollar yen continue to remain around this sort of 76, 77 level with the risk of it actually going lower. So if we concentrate on the Euro side of the equation, we think the downside risk to Euro are continuing to build, and at this point in time our Euro forecasts are under some review. But currently as they stand, we think the risks are of quite an orderly depreciation in the Euro and on a trade-weighted basis, and that's really why we think Euro Yen, Euro Sterling, and to a certain extent Euro Dollar will be the main outlet for Euro weakness. But the risks are associated, of course, with the fact that the Eurozone is going to go into recession. It's not really open to debate anymore. The only question is how deep is the Eurozone recession going to be. You
mentioned just now about the British pound performing against the euro. What are your forecast figures looking like then for the euro pound?
It does remain in a fairly tight trading range. We have 86, 88 at year end, and at the end of 2012 we have 88 to 27. So we do actually have a euro going up a little bit against sterling from current levels. But as I mentioned, the forecasts are under review at present. But there are clear sort of, I think, downside risks from euro sterling. But one of the factors to keep in mind is, and this is what's currently driving our forecast, is we anticipate the Bank of England stands a high chance of doing some additional quantitative easing come March next year, because we continue to expect a very weak performance in the UK economy. And we're also of the frame of mind that with the Eurozone going into recession, the UK economy is one of the most exposed to recession in the Eurozone.
Thank you very much, Richard. I'm afraid that's all we have time for, but there's a great insight into how some of the major currencies may perform over the next year. Stay tuned for another edition of Targets in Focus tomorrow with UBS. Goodbye for now.